Now, what does this mean for individual investors? Well, I'm glad that you asked. There is a temporary window to acquire the smaller deals before big money returns. Now, with institutional investors on the sidelines, individual investors can grab up these smaller properties, under $5 million properties at better prices before competition increases once they jump back into the market. Essentially, distressed opportunities are going to surge in 2025. If big funds are waiting for price drops, then distressed deals will rise. Now, I know you're thinking, what's the correlation there? How does that work? Kind of walk me through it. Well, as we've already said, big funds are sitting on the sidelines, they're sitting on their cash, and they're waiting. They're waiting until they can see a bottom to the market. Now, sellers who can't hold out must lower their prices. Many commercial property owners have to sell due to loan maturity dates, rising interest rates, or even just cash flow problems. Again, we've talked about if they bought at 5% interest and now the interest rate is at 9%, they've got a 5-year loan term, they've been holding this property, they can't refinance the property or find new lending because they can't afford it at the higher interest rate. What are they going to do? Well, they're going to it's going to become distressed and eventually get foreclosed if they can't get it sold. And without enough buyers at current prices, motivated sellers and banks are going to start selling those distressed properties at discounts to attract buyers. Institutional investors will basically re-enter the market now that they can see a clear bottom to it. But before that happens, and this is what's important for you, before that happens, small investors have a window of opportunity to buy distressed assets before competition heats up again. So investors have to be ready for those off-market deals, those seller financing deals, and the foreclosure deals. If you need to find any of those deals, give me a call.